Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Oh, you know what? I didn't turn the camera on. That's so funny, guys. All right, let's fix this. I might be a little off today because I am now on the liquids only diet, so I haven't had breakfast or anything. And there we go. That's a little bit better. Hold on. Move this thing out of the way here. There. Okay, so it looks like once again interest rates are a little bit higher, and we are now we're about where we were towards the lows of yesterday in the Treasury. So let's come over. Oh wait. Music. There we go. All right. To the charts. So here you can see ZN got pushed down pretty hard. There's a little bit of a comeback, and now they are selling once again. And by the way, we did get some analysis yesterday that I think was kind of the thing that we had been waiting for, the thing that, you know, would have allowed us to take better advantage of all of this downside action that we've had the last 2 months, which is that it is sovereigns that are, it's foreign holders that are selling the treasuries here. So that's very important moving forward. S&P 500 did not like when the yields really started moving, and so they had a little haircut over there. It could be more to come over on that one, although I think that we're probably still pinned to 4,400 for the end of the week. Here's oil. Oil having a little bit of a spike overnight with Iran saying that they should embargo Israel. We'll talk about that whole mess in a moment. Gold and silver continue to press forward despite interest rates moving. And this is a really big shift, guys. This is a huge shift. Copper also up overnight. Actually got some good data out of China. Their economic indicators and everything looked okay overnight. So maybe some good news on the China front. Here's Bitcoin, still kind of a little sideways here. And the dollar kind of struggling to get back above 106. So that's kind of the key thing here, is that as the dollar strengthens, it tends to cause foreign holders to sell both their treasuries and equities. So this is a flow we got to be cautious of. But I think within that perspective now, we can kind of understand the moves a little bit better. And some of my theories about, well, actually, I think that the dollar is reacting to the treasuries and not the other way around are probably accurate. And that it is liquidity over here in the treasuries is just absolutely dismal. So now we can kind of maybe better make our decisions now that I understand what the flow has been a little bit better. Okay, so Israel versus Palestine. Yesterday, there was an explosion at a hospital. I think it's like a Baptist hospital in Gaza. And so, of course, everybody started blaming it on Israel. But then Israel said, well, according to our metrics and everything, this was actually a rocket fired by Hamas that kind of like screwed up, died, and ended up landing in Gaza. And they have video of it. And this was also caught on Al Jazeera. So, and it was also confirmed by there's this internet group that basically anytime that there's video like this, they like geolocate it and confirm where it was. And so it's pretty much confirmed that the hospital explosion was indeed caused by a failed Hamas rocket and not Israel. But the world is basically so far like pretending like they didn't notice that happened. Like all of the Muslim countries condemned it, got really angry about it. Joe Biden had all of these meetings set up with Jordan and everything, and they got canceled because of that. And then they find out that it's Hamas. It's like this huge mess. But of course, nobody's apologizing, or they're still pretending that it was Israel's fault. Seems to have ratcheted up tensions in the Middle East. I don't know exactly where it goes from here. Because again, it's like so far everything that I see. Well, I don't know. It's kind of weird watching this conflict these days. Because it used to be that like Hamas would do all of this stuff. Like for instance, storing munitions in hospitals. And then when something would happen, Israel would tell their side of the story, but the media wasn't honest about it. Oh, I'm sorry. We have like big news coming up here. We get the housing starts number. U.S. housing starts change month over month, 7% versus an expected 7.8%. I'm not seeing too much reaction by the markets here. Oh, whoops.
7% being lower than expected.
Anyways, it used to be that all of this disinformation would just get a free pass, and now it's not. It's like I'm seeing it everywhere. Everybody is understanding what's going on. It's really hurting liberal causes. But so far, that difference hasn't seemed to made any difference, changed anything. So we'll see where this one goes. Yeah. But that's basically where we're at. And then for me today, well, I think we still have scenarios where CTAs would be turned into buyers. Now, the problem is that if it's sovereigns that are selling it, the CTAs aren't going to flip, right? We need enough of an uptrend to really get that ball rolling and causing people to cover. And I don't know where we get that. It does kind of suggest to me that interest rates could be a little higher than they should normally be. Basically because of supply and demand dynamics and so forth. Interest rates are higher, and that it doesn't really reflect any kind of prediction by the markets about where inflation or the economy or anything else like that is going. Right. Good morning, Jiwi. Man, I just feel like blah, because so I went to go and eat, and I was supposed to have some broth, and there was no broth there. Screwed up. Someone screwed up. So I'm a little miffed about that. Let's see here. I don't have anything too big. Like there are a bunch of Fed speakers, and there is a 20-year bond auction, but that's all after I'm gone. So I'm not 100% sure. Now, Fox News 16 minutes ago, Biden says Israel not to blame for Gaza hospital blast. Paris Ekbali? I don't, oh, we've been okay, I suppose. The trading could be better. I haven't performed as well as I would like to in the past few months, but I think I've been a little bit behind the curve lately. I don't remember your name, though, to be honest with you. Sorry. So they're selling it. There's like... It was going down on very little volume. Okay, there's a little bit of pushback and a strong bid popping up at 06. They even have a phone recording with militants saying that yes, that's right. I read that this morning. Oh, yeah. So, when I was thinking about this last night, I was like, oh, people are going to push back. Like, there's going to be a lot of argument about who, because, oh, these are Israeli sources. Do you really believe them? No, I would say it's 100% confirmed at this point that it was actually a failed Hamas rocket. Hello, Amir. I'd say it's 100% confirmed at this point. Kind of the problem is, does it matter? Like, when you look at this, so you definitely, so for instance, on the left, okay, like it's really funny to watch how basically every platitude that the left has used for the past however many years has basically been flipped on its head. It's like all of the ideas and values and so forth that the left was supposedly following, they abandon to support Hamas. And that's like, yes. People don't, most people don't actually adhere to their values. They're just tribal and they adjust what they think according to who it is, right? And that is absolutely what's going on with the people that are in support of Hamas and Palestine in these Arab countries. The reality is they hate Israel and they're going to read anything in a way that is anti-Israel, because that's really what this is all about, actually. And it doesn't matter what Israel does. Because I keep getting this argument that like, you wouldn't be getting this terrorism if Israel wasn't this racist apartheid state, yada, yada. Yes, you would. 100% you would. It would be worse because Israel wouldn't be fighting back and reducing the terrorists' capabilities. It would be worse. Because the reality is they want to wipe Israel off the map. They don't think that Israel should exist. Oh, I do remember one person asking about private mentoring. Not really a gig that I feel comfortable doing right now. It's just like too much going on. My wife was on my computer last night, and their baby was in here, and I feel like that things have been moved, even though I can't tell that anything's been moved. Gonna pick your brain, of course. Some issues that you have on your trading models. Yeah. You're probably doing just fine, right? You're probably doing just fine, and it's just that trading is effing hard. And system trading is extra hard. Finding a algorithmic trading system as a retail trader that's effective is even harder than just discretionary trading. Oops. I didn't mean to cut the music off. I meant to just minimize it. It works on some Forex pairs and fails on others. Okay. So don't trade it on the ones that doesn't work. No, but I mean, if you're going to trade a pair sort of a thing, you've got to have a way of knowing when to trade the pair and when not to, right? Pair trading based on Arama and co-integration, sure. Man. Well, as Uzi says he's trying the hero trade long. I'm not liking the flow so far, though. It is a sell so far. It seems like it's just kind of slipping, like the bids aren't really fighting it at all. It could be speculation at this point. I'm not sure. So I totally see the idea of going long. But, you know, it's just been short for so long. Long makes me nervous. I live in the US, but I'm from Syria, and it's sad to see how the middle... Really? Oh, yeah, from Syria. Yeah, isn't Nassim Taleb basically from Syria? Last time I don't even, he doesn't say where. He always says from the northern Levant, and I'm like, okay. I think that means Syria. You know what? I tell you, I thought that I knew a lot about the Middle East history and the history relating to the Israeli-Palestinian conflict. And this past week, I saw 2 videos that I learned a lot from and really put into perspective for me how much there is to know and how much has changed. Morning, Brando. So the first one was a story from this journalist. She said that when she was a kid, that Syria was majority Christian, and that Hezbollah, you know, got kicked out of Israel essentially and moved into Syria and took the country over and was like ethnically cleansing them. And the story that she was telling was that she would dress up in her best Sunday dress because if they were going to come and kill her, she wanted to look good. That was Syria. So I had not realized that like a massive change like that in Syria had happened in the last 50 years, which is kind of scary. She was kind of putting it in the perspective of like, seriously, guys, you don't want to mess with this stuff. Like you don't want to risk allowing these things into your country because your country can change. I don't know. Syria's a small country, but still, that's kind of what she was trying to say. The other one that I watched though was about the 1967 Yom Kippur War. Is that what am I got the year right there? And basically at that time, Israel had owned like the whole Sinai up to the canal, and they had built this huge this huge wall along the canal so that the Egyptian tanks couldn't get through. And then they thought that everything was fine, and so they let everybody go for the holiday, and that's when Egypt decided to attack, and Egypt was able to get through the wall and invade through to the Sinai fairly easily. So it wasn't a an effective defensive thing at all. That was something that I did not know about. That like that I was like, well, I knew that war happened, but I guess I don't really know a whole lot, if anything, about that war, do I? You're comparing the Sierra data with your... Well, so if you're trying to look at what's on my screen, you know, like there's the stream delay. So that wouldn't really be a very fair comparison, right? It wouldn't surprise me to find that you get a lot of level 2 updates from Sierra charts slightly earlier, but it's going to be by like a frame or two, you know? Like the difference between these platforms when I've tested this stuff is like milliseconds. And the other thing that's super weird, yeah, there's a stream delay. The other thing that's super weird is that the updates don't come in the same order. Like I think that we have this idea that like it's all the same data, that they get a piece of information from the exchange and then they just pass it on to us. But that's not what actually happens. The data providers are actually doing a lot to the data before it gets sent to us. For instance, there are a lot of level 2 updates that are like happening so fast and are basically trivial, and the data providers completely filter out to us. And you know, if 2 events happen at the same time, how, you know, and let's say that this thing is running on a thread that's like, you know, okay, I process every 10 milliseconds and you know, the things, and what if 2 things happen within that time frame, which one does it end up processing first? And so you end up with different data feeds processing them differently to the point that some things can look completely different. Interactive Brokers filters out a significant amount of processes and less data. Yeah. Let's see here, Ferris. It got bad enough to where they started driving taxis to blend in. My mom worked for the American Embassy and was a business manager of the American School. And her friend was actually kidnapped? Really? Oh, date check. Thank you. Today is the 18th. It is real crazy. Something else I thought was interesting about all that, because Nassim Taleb is from Syria, I think. And he was saying that, like, I can't comment on it unless I have skin in the game. So he flew back there to his home in Syria, I guess, before he started saying stuff about it. I thought that was really interesting. Okay, well, there was a little bit of some support there at 0.2 I mean, that's probably the strongest bounce we've had so far, but it's just been sell. Yeah, that contract at exactly. There was like a big buy at 0.2. And in fact, I see the same number that you do, $12.99. Doom is still here to tank the futures into the lows. Yeah, well, you're seeing the dollars moving very aggressively here. See the dollar moving back above 106. Although I would say there's a pretty steady and consistent flow of selling in the treasuries here too. I mean, it's enough that I could totally try and I could totally go for more. I'm a little bit nervous about going for a continuation trade with what I just saw there, but otherwise. But I mean, the cumulative delta says that I should be able to go short with treasuries. It works great on Euro Swiss, but it fails on the pound Swiss. But if I were to only go long on the pound Swiss, it is just beautiful. Any idea why? Well, so one question is, what is the data sample that you're using, right? Because it could be that during the time period that you are testing it on, that currency pair has just been up most of the time period, right? Right. If I go and I do back test a strategy on the S&P 500, and it's like my longs do really, really well, but my shorts don't do very well, a lot of people say, oh, well, okay, maybe this strategy just only works long only. But really, probably the reason you're getting that result is because the S&P 500 mostly moves up. Over time, it's mostly up. So 2018 to today. Well, that is a pretty decent period. Market is different every minute of each and every one. That's why you have to predict the orders. That's why you kind of have to know what orders are going to be coming out. So my whole thing here is, I mean, gosh, when I look at the overnight, we're negative 15 and now we're negative 40 essentially. So we've had a good 25K contract sell here. I don't think that could be just speculation, right? That must be sovereigns selling more. But we did get a break there. So I suppose the play for me, if I was going to make one, I probably shouldn't trade today because I'm not going to be my best. I haven't eaten. I'm on liquid only diet at the moment, and the liquids were not purchased correctly. I said get some broth. She didn't get the broth. There's no broth in that fridge. Don't see it. Probably she's gonna get up and I'm gonna complain about it. And she's gonna be like, "Well, did you actually look?" Then I'll find it. Probably what's gonna happen. But I digress. So I don't know, and I don't know. The other thing is I don't know if I want to like expend the energy sitting there watching a trade and being nervous about it, you know? I do kind of wonder here, though. China, it seems like China is selling bonds, some of its bonds, and maybe using that money to prop up their currency to buy Chinese yuan. That's a dynamic that could go on for a really long time and that you don't want to stand in front of, right? Is that what's driving it this morning? I'm not entirely sure. The way that it's kind of trading kind of seems a little more speculative to me. You know, like you can see people making plays and doing stuff and taking the buy and trying to push it the other way and so forth. So you had the same results. Would you go live with the strategy on pairs where it works? Oh, well, totally. If works on one pair, because I wouldn't expect all pairs to be auto-correlated correctly. Although I think the thing that I would be doing is I would be looking for a metric aside from just doing the back test, but some mathematical test or metric to show me why it works on some pairs and not others, you know? It would be like, these ones aren't actually co-integrated. Right? Have to see how the cash open affects the yen. Oh, that's a long ways from now, though. That's 30 minutes from now, and they're pretty active in the treasuries at the moment. Okay, well, there was definitely a reversal there. If I wanted to go for the reversal with Uzi, I think I'd do it right there. I don't know if Uzi's still in that. So here's another question. Shh. I think that means that he's not in anymore. Or maybe that means that he's still in and he doesn't want anybody to screw it up. I wonder if, you know, if it's sovereigns, if it's like China, for instance, dumping bonds, do they want to do it early, like maybe even before the pit session opens up? Doing it during European hours? And maybe that's why you get this thing where it's like it's sell for like the first 30 minutes and then it reverses and goes higher because covering and so forth. And it makes you wonder. Because we've seen that a lot lately, haven't we? Would have been 486 if I had taken it. So I would be up a little bit. I am seeing the flows flip around actually really aggressively, in fact. Slip back down, but I'm kind of liking it. I'm struggling here. I'm going to take it over here and sim. Come through here into Twitter and read if anything interesting. Let's see here. U.S. Treasury sanctions aim to root out Hamas sources of revenue in the West Bank and Gaza. Well, it's just kind of sitting there. It's looking good so far, though. Let's read about the housing numbers, shall we? Morgan Stanley slides after investment banking and wealth management disappoints and credit loss provisions rise. X charges new users $1 to combat spam. So they did do it, huh? Yeah, I don't know, man. So there's this whole thing about we still don't have a speaker. They did a vote. I think they did 2 votes yesterday, actually, and Jim Jordan doesn't have enough support to be speaker either. In fact, it's just as bad as McCarthy was. I'm really not convinced that Jim Jordan is the guy, but it's once again, they're like, he's the one that's pushing and he's the one that's up for vote. And so now it turns into we have to make him happen sort of a thing. So, who knows how long that goes on for. And, you know, things got pretty heated yesterday, but again, it was all based off of misinformation, you know? Israel did not do it, so So want to note there that the 5 year seemed to go a lot more than the others in this situation. So I'm not, even though we're actually technically slightly lower, it's not giving you 486 again. You want to see 06 go bid? Yeah. You notice that there's like a reluctance to hit it at 05.5. It's not that they can't get through that 05.5. It's that the market orders aren't showing up to do it yet. Because I've seen that. I've seen the offer pull away hit there a few times. Okay, so that time it went bid. Nobody's hitting 06 yet. Okay, well that helps me out a little bit. Let them go through here. If they come back up to this node that they had before the open at 09. I think that was an okay uptick. It definitely makes the chart look good, doesn't it? Although I would say, well, you know, okay, so when you come and look at the deltas, for instance, you can see a shift in the flows. But I mean, we saw that many times yesterday. So this could still be a pullback, you know? I think that for me to say that like the downtrend is over, I think I would need to see us, you know, be clearly up above here, for instance. And even then, that could still just be a range. They could still maybe trade across that whole range. But that 09 is showing the average positioning for the shorts and so forth, so. I think, in the meantime, if this comes back down here, I'll continue trying to make a market here. Well, let's read here. Zero hedge. At a moment, the whole region threatens to erupt, and as mass protests continue across Arab capitals and in many other parts of the world, President Joe Biden arrived in Israel Wednesday, pledging unwavering U.S. support for Israel, breaking from other allies like France's Macron, who appeared to condemn Israel for the deadly Al-Hi Baptist Hospital bombing, Biden instead, during his first meeting with Netanyahu since the crisis began, sided with Israel's narrative of events. Based on what I have seen, it was done by the other team, not you, Biden said. I find it curious that Zero Hedge is not interested in all of the information that basically proves that it was Hamas, but okay. There's a lot of people out there who are not sure, so we've got to overcome a lot of things. He added the Israelis had the day prior emphasized that they had shared their case, including intelligence they say they possess, with the Americans as Biden was en route or Air Force One to Tel Aviv. Likely Biden's comments were enough now to satisfy the Israelis who are under growing international pressure given the massive death toll. I feel like that Biden's comments here are like a little too tepid. Okay, so here's Israeli Defense Force. There's the audio of that. Nobody has been given access to the site. Okay, so another thing that people were speculating on was that they were storing munitions at the hospital. So if that's the case, that would maybe explain why there was such a high death toll on it and everything. You took the so you just caught that little up move and then you were satisfied with it? Fair enough. Because you can see, like, okay, it spiked up there. It's back to 05, and now you look at it, and you can kind of see how it's like, well, actually, if I wanted to go for the short, and it moves like it did yesterday, 486 might be the best that you get. You know? Can't say you're out of the woods yet. You closed it too, huh? Well, my issue here is, I am kind of market making it long, but I don't really feel very dedicated to the long trade either. I think it's worth taking because if you're going to get a counter flow, those can really move. So I sat there when it was at 486, and I guess I wouldn't be taking profits yet because on the micros, I've got to get at least 10 ticks to make it worth it, right? So I probably would still be in that one. But I really, really wanted to do it. And I said, nah, you're not. You really shouldn't because you're not going to be in your best. And I've learned that when I'm in this situation, it's like I'll have a bad one, and then you want to just do it again and again and again. And it's harder to stop yourself because you're weaker. It's just not a good setup for, a good time for me to be putting on risk. Today and tomorrow. My focus, unfortunately, my focus for the next 2 days is pooping and not trading. Is that one tick below yesterday's? Well, I wouldn't. You know what? Of any, yeah, I'm getting a colonoscopy tomorrow. That's why I haven't eaten. If there is any level that I would advise against, utilizing and I would actively distrust, it is closing prices. Closing prices are very manipulated. I wouldn't trust them as a level to, Sorry to hear that. No, you don't be sorry about it. It's just like a checkup. So if I come back and I have cancer, then you could feel sorry for me. But at that point, I think if I come back tomorrow and they find cancer, I think you should congratulate me. I think you should congratulate me on finding it early and you know, it'll all be good. Like if I do have cancer, then it'd be good. Then it would be like, oh, Seth, you've been like, you know, you've been working with 40% because you had cancer, and now we got it early. We can root that out, and everything will be good. That would be, so it would actually be a success if we do the colonoscopy and I have cancer. But it's just a regular checkup, and I think at this point now, I forget what the metrics are, but I think that they're to the point where like I have to get one every year, or was every other year. Ooh, they totally took me here, huh? Well, I guess I should take one off at 05. I guess I should do this. I'm 38. I'm 38. No, I'm not at that age yet. But I have that condition, right? I have ulcerative colitis, which is basically I get ulcers in my colon because my immune system is attacking my colon, and they're not exactly sure what causes that. Well, I don't like the way that just careened down there so quickly. I can't believe that you guys all got, you know, you all decided to not hold it. Oh, this is that big order at 03, but it pulls. This is a little bit at 03.5 as well. That was a lot of selling there, man. That was a lot of selling. That was not like, okay, I don't think that what we just saw there is like large meta order sell. That was way too aggressive for that. That's got to be like stops getting hit or something. You know, I get skittish. I didn't see any reason to hang on. Yeah. Well, I think the I think the thing that I find interesting about it is like the point at which you guys decided to do it. Because it was like, okay, you got the spike, and then you're like, okay, I'm going to take it off. You know, because how do you know if it's going to continue through or not? I guess in this situation, we don't really have a whole lot to really reliably tell us that. But you guys got it. Possible bounce. Well, on my tenure, I'm not seeing the bounce in the delta. I just see that the delta careened down to new lows, and there's a big bar. Maybe they'll retrace that. We'll see. Just instinct, I guess. Maybe the reason it failed was because you guys all sold. Your fault. I mean, what do you mean your price lows versus? Oh well, I don't care about divergences, to be honest with you. But I think what you're trying to say is that they made a new low by a tick, but the cumulative delta was about equal, which I'm not necessarily. So when I'm looking at cumulative delta, what am I looking for? I'm looking for after I get in, buying behind me. So that sell is like a really big, a really big counter indicator to what I'm trying to do, right? And in fact, one that big could possibly be enough. If it was a live account, I think it probably would be enough to get me out, but I'm being degenerate right now. And I want to see like the consistency of it, right? Like this is a very consistent downtrend. Okay, pull back. Then all of a sudden it just careens down. That is not what I'm looking for on the short side. That is too much. If the volume ain't pushing it lower and the price ain't pushing it, or it could be about. I so because the whole thing is, wait, how come I don't have my freaking, hold on a second, there we go, because I'm essentially viewing this as one huge, right, this is the meta order, right, that's where we're kind of getting into, is square root law area, right? So that's why I'm interested in market making it around in this area, is because there should be a tendency for them to get locked back to this 04.5, 05 area, right? They're falling out of it because you're getting extremely aggressive selling. What would justify such extremely aggressive selling? Okay, so now let's come back. Well, it's not the Japanese yen. Come back over here. It's not the dollar. So it's just like this bizarre sell out of nowhere. Probably there was some stops involved with it as well. Trying to get itself out of a liquidity hole and not quite making it yet. So that's why I'm kind of still willing to hold it. But it's risky for sure. It's risky for sure because the trend is down, and that was really aggressive sell side order flow. But my working theory is that was like just panic. So could help us. Yeah, now you gotta wonder if these larger sellers get squeezed out from the low of the day, could we launch back upwards? Yeah. Well, so you would have to, if those were people exiting trades, right? That just means that like you've probably run out of there's probably less sellers, and so I think that the best call here is that we continue to rotate around 03.5 is the most likely scenario right now. You would need somebody to come in long. We have not seen that somebody come in long yet, right? If they don't come in long, then we languish here in this area for, forever, and then eventually do push lower again. So I think that's where this becomes a risky trade. But if somebody decides to push back and they were just given the perfect opportunity to do it, right? So I'm just gonna kind of sit here, and then if he doesn't do it, then I guess I'll just scratch it. And what would you see if you're gonna push lower? The low with 12.98 broken. I don't know if it would necessarily have to see the delta low broken per se. Probably in this situation it will though, yeah. So like what could happen is like, okay, let's say you have a move down, comes back up, comes down. We are basically right here like this, right? And then I'm saying it's going to do this for a little while, right? And then maybe it will do that. Okay. So if you look at the cumulative delta could do something like this, where it actually, there is a decent amount of buying that comes in through here, but the offers aren't getting out of the way. And then when they sell, okay, maybe it just comes down to equal or not even, oops. It could, oh, come on. It's possible for it to do something like this, right? It is possible for it to do something like that. But see, I don't treat cumulative delta like Dow theory, right? What I care about is when we get, a move in cumulative delta, how far is it, and how consistent is it. That's all I care about. Because basically we know, because of some of these dynamics with the order book, you can get these things where there's a divergence between cumulative delta highs and lows and price highs and lows. And that's a function of the liquidity. So at some point we should almost expect those divergences to happen. And we know from testing them that those divergences do not tend to be very effective predictors of where we're going to go. So my cumulative delta is primarily about trying to identify large meta orders. You're still just reading the delta? Well, yes, but I'm not reading the swings, right? What I care about is the absolute change in cumulative delta and the amount of autocorrelation in the cumulative delta. And I don't care so much about was this swing high in cumulative delta higher than the last swing high. Which would basically be like trying to apply price action to cumulative delta, right? Yeah, what I'd see is the delta isn't going any lower and the price is holding. Well, but to me, well, so let me put it another way, because I think that what you're saying is, and the way that I would put it is, there was some buying here. There was some buying here, and then they puked it all at once, right? There was some buying here. They puked it all at once. They made it one tick lower, right? That's what I think you're saying. And I'm just saying, I don't think that is a clear indication of whether we'll reverse or move lower. What it's an indication of is that there's a liquidity hole here. So I cannot accurately predict based on that if the next swing is higher or lower. What I can predict is that we're probably going to be stuck here for a little bit longer. And the reason why I think that is important is because I think that kind of works against my strategy, doesn't it? Because if I'm coming in there and I'm saying, okay, here's an area that I can market make off of, part of the reason I'm doing it is, okay, I know that I can market make in this area, but ultimately I think that they're going to move up. Ultimately, I think these lows are going to reverse and they're going to move up. But if that's really what we're going to get, I think that the best opportunity for them to do it has already passed. So I'm kind of looking at having to scratch it here. Like I'm going to wait for the E-mini open, because I think that could move the dollar and we could see what happens. But I think after that, if I don't get some favorable excursion, that I'm going to scratch it. Because of how thick ZN trades, those areas can help spot exhaustion pretty easily. Yeah, well, so the whole thing is that so this is where we got to go back into Almgren Chris, right? They would argue that applying price analysis stuff to delta is more useful than applying it to price. What you mean price? What do we call it? Price action analysis. So what is Almgren Chris? Almgren Chris is an algorithm that they put out in 2000, I believe it was, that it basically was saying, hey, if you are a large portfolio typically when you're trying to buy the E-mini or whatever it is, you use like these VWAP or TWAP algorithms, and that's how you time your trades. And that's why a lot of people they like to watch VWAP, because these funds are using that to some extent to execute, right? And they say, if we're below, if I need to buy and we're below the VWAP, then I can buy more, essentially, because I'm getting a better than average price. And that's how those algorithms work. And what Omgra and Chris said was, what if we just optimized our algorithm towards minimizing our impact on the book, essentially? And so they modeled out a couple of different dynamics. They said, okay, like, what does the book look like? How much time do you have to execute the trade? What is the risk that you're willing to take on it? Do you have an expectation for what the other flows are going to be? Are we going to move up or down? And you combine all of these things together, and it gives you a schedule, essentially. And so it says, like, you should. So the most likely thing for it to come out is like, if we're going to buy, or sorry, we're selling and we're risk adverse, essentially. We're selling, we're risk adverse, and we think it's going to be neutral to down. Then what Omgra and Chris is going to say is, if you're going to sell 1,000 contracts, let's just say, then I'm going to do 500 of it first, and then I'm going to wait 45 minutes, and then I'm going to sell 250, wait 45 minutes, and then I'm going to sell 125, wait 45 minutes, and then by that point I should be done. So what are you doing? You push the market until you run into that square root law, where the liquidity is strained. You want to see that liquidity being strained, okay? And then that becomes a hole. So now you can execute in this area. You can actually execute quite a bit in this area, right? But you have to do it at a slower pace. And then when the liquidity has recovered, then you can come in and push aggressively again to make that area happen. And so it's kind of funny. It's very counterintuitive, right? By pushing the market and creating that liquidity hole, they actually give themselves better execution. Because if they didn't do that, and they ignored their impact on the book, then their impact would just be like way more. And that's when you get this sort of thing where it just goes like this, like after the not CPI, like after retail sales yesterday, for instance, right? So that's why I'm looking for the way that I look at this is like, okay, you have a meta order. There was, without question, there was a leg of a meta order. There was a leg of a meta order, and we're in this right here, right? Okay. If you want to go long, the sooner, the more in this area that you can do it, the better, because you're going to have more impact. Essentially, you're doing a speculative trade, you're going to have more impact, and then you can get this sort of a thing, right? And you could even do it like this, like if the price moved like this, you could watch cumulative delta be going like this and not breaking a new high, but it still goes higher. Why? Because of the liquidity being damaged, right? That's why that's why I say don't pay attention to whether this swing is higher than this swing. This is the liquidity, we should expect that to happen, okay? But on the other hand, if I think that there's more to this meta order, I don't. I feel like that was a pretty extreme move for the situation. I also think that kind of like that push back down to lows that we had, because really our chart actually looks like this. It's like this. Bidish. Right? That's really what it is. That is suspicious to me. That is suspicious to me. So you're doing well. Okay, orders move the markets, but the problem is the type of analysis that you're doing on the orders, right? Because there can be some forms of analysis that just aren't actually doing anything, right? And the thing that I'm trying to point out is that because of the stylized behaviors of markets, you will get these kind of screwy things with cumulative delta wherein, you know, cumulative delta is swinging within a range, but price is actually moving, maybe even moving higher, right? So I'm saying that like Dow theory analysis of cumulative delta is not an effective method of analysis on cumulative delta, right? But I'm not telling you to ignore cumulative delta, because the first thing and the most important thing is if cumulative delta is going down, it comes back up, and then I take a trade right here, I want to see cumulative delta continue moving up. It's not, right? That's why this is a bad trade. I've let it hold on too long. And they're actually now, I said I wanted to hold it until the E-mini, but like, look, they're pushing it to lows here on the E-mini open. Yeah, I think it might fall off here. But to the point that I'm trying to make, okay, we're pushing new lows. We're not anywhere close to cumulative delta low. But what does matter is I took a trade right here and cumulative delta isn't getting higher. what I want to see is more like this, right? What I want to see is I get in somewhere right here and then I just see consistent selling. That's what I want to see. Yeah, sellers are absorbing the buys. Correct. Yep. How come I didn't hear the sound when the cash open started? Yeah. Okay, whatever. The E-mini is having a slow start here, though. So I was thinking about scratching it up in here. I'm really unhappy that you can, oh, sorry, you can see what at a glance looking at the delta price relationship? Oh, that the sellers are absorbing the buys. Yeah. That is to say, like, if we were in this situation where the liquidity behind us was still damaged and it was easier for us to move up, then we probably should have gotten more price excursion off of the buying that we did see. Yes. Okay, so I really screwed up the exit on this, and now I'm just kind of like deer in the headlights, right? Well, okay, but it is a divergence, but what I'm saying is that divergence does not predict what's going to happen next very well at all. Nothing predict. Well, there are some things that can give you a better than random chance of predicting what will happen next. If we had news or we had some reason to believe that somebody was executing a large meta order in a certain direction, that would certainly be one. right? In this situation, part of the reason why I'm a little skeptical is because I don't think that we're in that situation. Like, basically, I'm coming in here, I'm expecting neutral, and I'm seeing a large meta order sell, but I've already seen a ton of contracts go through off of it, and so I'm really skeptical that they will continue to have the orders to just keep selling. I think that so far, everything that we're seeing here is still within the random, hole. It's just random behavior within the hole. Market makers in control. I guess that I normally wouldn't take a trade off of that, right? That still brings me back to what I'm doing is a little degenerate, doesn't it? But the other thing that we have that can predict very well what will happen next is the autocorrelation of order signs. Right? That's why, like, the main point that I'm trying to make is that I have, like, hard, concrete evidence to suggest that how autocorrelated cumulative delta is a very effective indicator of where things are going to go. The more of a straight, consistent line in one direction that the cumulative delta is, the more predictive it is, or the better. Let's say the better. The more of a straight trend that you're seeing in cumulative delta, the better, because that is a strong indication of large meta order being executed. And those large meta orders tend to persist all day. Right. And it helps to be aware of when that autocorrelation breaks. Yes, exactly. Because this thing right here, for sure, I'm still in it. I think I screwed up. Maybe it works out for me. This thing right here is a really big screw up of what I'm trying to do. Like that really strongly suggests that the whole basis behind my trade is flawed, right? I can dismiss it as people getting stopped out, but the issue remains that you're not getting a countering meta order long. It's just not happening. So, see, the problem that I have is, like, okay, I'm expecting it to come back up a little bit so that I can scratch it. What is the actual appropriate level for me to do that at? Should I have just scratched it at 0.3 Well, in retrospect, that would have been a good idea to do it, right? In retrospect, that would have been a good idea to have done it. But at the current time, because I guess the reality is that I'm viewing everything that we're seeing in this area as noise. And so how do I manage that when I'm in noise? You can always just average it down all day. This is true. I mean, the way that it's behaving it right now does kind of suggest that I could try and average down a bit more at 0.2. Now, the split side of this, if I'm to think of my live account over here, and I'm not going to take a live trade today, but if I wanted to take a live trade today, could I justify trying to go short on a continuation trade short? And I'm going to say no. I think that it's been long enough. We should be seeing the next meta order short. I don't think that I'm getting flows suggestive of continuation here. That doesn't necessarily mean take the reversal trade, but Oh, we do have, what do we get? No, I don't have anything on my calendar, actually. The next big thing I have on my calendar is gasoline. Oh, got a big evens. Oh, right. Oh, I see. Yeah, that's a good point. That's probably something that I should have been factoring in, huh? Because this whole time we probably could have been looking at at 06 as a big target. But that kind of says, well, it seems like they're having a hard time getting down to it if they're trying to get there. Ideally, I'd try to position myself at evens or, yeah. There's going to be more liquidity at 106 even. 100%. So, like, if I was looking for selling to exhaust itself and reverse, you know, 106 is an area where it's more likely to happen. It's just, it seems that in this instance, that they ran out of steam before they even got down to that. So something I remember when I was talking to the Goldman traders was I was like, so is there something that you'll like, what is your thing? What do you like to look at? Because she kind of said like, well, you know, they teach us certain information and behaviors, but then you're encouraged to personalize it in some way. And so I asked her how had she done that, and she said, well, the thing that I like to see is the bars twisting in on themselves. Right? Goes up like this, comes back down. She wants to see, like, I think a lot of people call it congestion, right? It's just like the bars overlap a lot. The bars overlap a lot, and there's no clear trend to it, and right? And that, I think, was her signal that, like, we were in a liquidity hole and that was where she was supposed to be trying to execute and playing the game. Essentially, that was her role, was playing in that area. So it's this, I think it's the same thing with cumulative delta, right? This is when I come over here and I start seeing it like, okay, it was really, really consistent all the way through here. Let me zoom it out a little bit to make that more clear. Yeah, I mean, you can see it on the chart very clearly. It's very, very consistent through here. And then all of a sudden, it's like all over the place, right? That's like a key change in the order flows that matter significantly to what we do. Oh man, I might get my fills. I think that, again, because this area is a lot of noise, that I really just got lucky here. But I do also think that I was making a correct read of the flows and a prediction of the flows. That there was a large meta order. It's done. It's done, and there's not a second leg. That doesn't necessarily mean reversal. But in this instance, it seems to be giving us enough that we should be able to get a fill at 05. Come on. Maybe not. Maybe that's as high as it's going to go. They're giving me the last chance to scratch it, and then it's going to careen down to the lows. That's probably what's going to happen. I'm not seeing any move in... Oh, actually, I take that back. I am seeing some buying in the Japanese yen. That's kind of lifting us back up here. By the way, probably more important move on the macro side, gold is doing another lift off here, man. Look at freaking gold today. Like, we had some strong moves up in the overnight session, London session, and now here a little bit after the basically starting when the S&P 500 opened up, you're seeing gold buying. I mean, I already own some silver, so I don't think that I change anything, but if I didn't have that position, I kind of would hope that I had already taken the long in it, because there's definitely been a shift in the macroeconomic framework. Gold is moving up now despite rates being really pressured. Which one is the current traded gold contract? Gold trades quarterly, so it's December right now. It's Z or whatever you call it. GCZ23 or whatever. Oh, I did get a fill too, by the way. That's good. I feel a lot more comfortable if I had gotten that one at 05.5. All those shorts got messed up, probably. I mean, cumulative delta is not necessarily running higher, so I still think that we're kind of in a little bit of a liquid. So what I'm seeing now, the thing that is going through my mind right now is that we're to the time frame where the liquidity should be healed. But I am seeing some behavior that suggests otherwise. So, yeah. I'm not quite sure what to make of that. But those shorts got to be pissed, right? I'm betting that they're hanging on. I'm betting that they're hanging on. But I'm going to cancel that one because I don't think that point is relevant anymore. and because I added the other contracts and I've gotten enough to give me my cost basis all the way down to 02, I think. Should be fine. Oh, yeah. So what I was going to say is, because we've moved up here without like that much of a change in the market orders, now we definitely get the possibility of, if we're able to get a little bit further, you start to see stops come out, right? And given that the offers are being kind of flighty, that means this is just kind of a risky trade on both sides, but particularly for shorts at this point. Because really everything that we saw down there, it was kind of like, I don't know if there's going to be a large flow coming in long or anything like that, but it does kind of give you a good setup for if it does come in, right? Now, I don't think that the liquidity conditions give you a good, possibility for this, but I do think that the positionings do. There's probably a lot of puking and short covering that has to happen if we actually are able to get a good trend going. I'm still not seeing enough cumulative delta on here to suggest a strong meta order pushing the other way or anything. So if it does do that, it's going to be market making games, right? So is it going to come in here to zero hedge? GM postpones Investor Day presentation. Wall Street analysts sound alarm. Bond market noise hides tremendous opportunity. Let's read that. Authored by Michael Lebowitz via realinvestmentadvice.com. Treasury yields are overwhelmingly a function of inflation. However, in the short run, a plethora of influences can explain deviations between yields and inflation. These factors, which we call noise, are significant for short-term traders but can hide tremendous opportunities for long-term investors. Okay, so I like what I'm hearing already, because they're basically saying, oh yeah, price isn't very efficient, and so short-term flows could be hiding what the actual fundamental story in treasuries are. Okay, let's continue reading. As we witness, bond market noise can be deafening. The horror-ridden narratives explaining the sudden rise in yields are compelling. They can steer even the best traders away from a golden opportunity. For those bullish on bonds, separating the noise from the signal is difficult, but doing so allows you to alleviate short-term stress when bond prices move adversely. Additionally, it helps maintain confidence in long-term fundamental prognostications. This article discusses one of our favorite bond fair value models to show you the true bond yield signal. The signal is the meaningful information that you're actually trying to detect. The noise is the random unwanted variation or fluctuation that interferes with your signal, at least conceptually. What is noise? Market noise is the primary determinant of hour-to-hour and day-to-day price changes. While it is very important for short-term direction, its influence often wanes quickly. Today, there are a plethora of concerning narratives explaining why bond yields are rising. At a first glance, they make sense and should be worrying. However, if you take the time to research them, you may find recent bond market narratives are insignificant temporary noise. Noise can be separated into real noise and false narratives. Real noise are influences that changes the demand and or supply of bonds. For instance, risk premium describes investors' preference for longer maturity bonds versus rolling over a series of short-term bonds. These preferences matter, but trends in the risk premium are well correlated with inflation and inflation expectations. As such, our signal, inflation, catches this noise. Another example is the Fed. Through managing the Fed funds rate and doing QE or QT, they affect the supply and or demand for bonds. However, monetary effects will also show up in our inflation signal. A recent illustration is the flight to quality trade in U.S. Treasury bonds due to the Israeli-Hamas war. The demand spurt will likely be short-lived as investors begin to acclimate to the situation. However, oil-driven inflationary concerns may arise if the war proliferates to Iran and other oil-holding countries. Again, this will show up in our inflation signal. I'm feeling pretty okay. I don't like trying to dismiss that because all orders matter in the end, but okay. False narratives are meaningless noise. These are stories that market pundits tell to justify market actions. False narratives can certainly move the bond market in the short term, but their shelf life is often minimal. Listening to the media or Twitter, one might think Treasury debt issuance over the last 6 months is off the charts. Such stories are far from the truth when looked at from the right perspective. Consider the graphs below. The top left graph shows federal debt is growing slightly faster than the pre-pandemic years, but well below prior surges. The right chart puts debt growth on a log scale to show the current growth rate is actually slightly below the trend of the last 50 years. Lastly, the bottom graph shows the sharp increase in debt to GDP during the pandemic. However, it has declined since. A high debt to GDP ratio as we have is very problematic, but false narratives claiming recent issuance is well above average are flat out wrong. Okay. The recent sell-off in bond prices and increasing yields is not due to massive treasury debt issuance, nor is it due to China, Japan, or other nations selling our bonds. The reason is I don't know if I agree with that one. Because I think that there's considerable evidence to suggest that the rise in yields, what he's calling noise, is due to China selling. At least we just got some information today, so maybe he hasn't seen that stuff yet, right? The true signal guiding bonds yields is inflation. When combined with the current yield levels, we found that a combination of actual inflation data, market implied break-even inflation rates, and surveys of inflation expectations are extremely well correlated with yields. After comparing such economic inflation data with bond yields, we have observed the Cleveland Fed's Inflation Expectation Index is far and away the best predictor of yields per the Cleveland Fed. Cleveland Fed's Inflation Expectation Index. Okay, I don't think I've heard of that before. The monthly scatter plot below shows that since 1990, 10-year yields and the Fed Inflation Expectation Index, which is also 10 years, have an R-squared of 0.966. Wow. 97% of Treasury bond yields are explainable by the index. As you can see, the current yield lies about 1% above the trend line, ergo, current yields are about 1% above fair value. Okay, let me pull this over so you can see the chart. Okay, so he's saying that we're this far off from the line from the deviation. Okay, sure. I think that would it would be fair. The monthlies. Oh, I already read that part. The following graph uses a line to compare our regression model to actual yields. As it shows, they track each other with precision. However, the green and red differential bars show bond yields can deviate from the model's fair value calculation. As we highlight, the increase in the difference or noise has grown since 2008 is likely due to the Fed's bond buying activities. Yes, I see. But it's not that their fair value model is starting to catch up to the Treasuries. So the yields are leading that, essentially. So I don't think you can completely ignore that. Our fair value model not only tells us how much noise the bond market is pricing in, but also allows us to forecast future fair value yields based on our own inflation expectation projections. The regression trend line in the scatter plot is defined by the circled formula. It calculates where yields should be based on the Cleveland Fed index. A slope of the regression line is 2.77. Each 1% change in inflation expectation should result in yield change of 2.77% in the same direction. The current, okay. I like that. Current inflation expectations is 2.21. If you think expectations will eventually return to pre-pandemic levels at 1.65%, then the fair value 10-year yield falls to 2.09. With current yields around 4.6, the turnaround to fair value would generate a 20% return on a 10-year note plus nearly 5% a year in coupon payments. Okay, so I do not agree with that one in the least bit. So first of all, the assumption that inflation comes back to the pre-pandemic average of 1.65 is like a really huge assumption. And they're acting like that's just like a fair default level sort of base assumption, but I really don't think it is. I think that the expectation should be 2%. So if you do 2 times 2.77, no, that's not right. As they say, 1.65 times 2.77 is 4.5. So I don't think I completely understand how they're getting it. They must be saying current inflation expectation is 2.21. So I think it must be 2.21 minus 1.65 times 2.77 is a change of 1.5. So they're saying that yields will decline 1.5. But I'm saying that it's 2 minus 1. Oops. 2 minus 1.65 times 2.77. I'm saying that it'll only change 1%. Okay. But that would take us to 3.5, which is about where I'm expecting us to maybe come. I mean, that's where we were not too long ago. Okay. What if inflation expectations rise? Thus far, we made a bullish case for bonds, assuming the Cleveland Fed expectation index remains at current levels or declines. We would be remiss if we did not discuss what happens if inflation expectations increase. Current yields will be at fair value if inflation expectations rise by about 0.5%. For every 1% that expectations rise after that, we should expect yields to increase by 2.77%. Let's put some context around that. Inflation expectations at the recent peak were 2.45%, or about 25% above current levels. Therefore, a 1% increase is highly unlikely, especially given that many supply and demand imbalances that led to higher inflation have largely dissipated. I would agree with that, except for that, if inflation does get started up again, it's going to be super crazy, right? Further, if inflation expectations start rising consistently, the Fed will increase interest rates, and all but assume a recession and disinflation or deflation. It is also worth noting that the elevated rental and house prices keep CPI well above where it should be. We say should be because real-time market shelter prices are falling, as the arrows in the graph below highlight. Shelter should continue to decline, catching up with actual prices. With it, about 40% of CPI will be dragged lower. Summary: the noise in the bond market is thunderous these days, as inflation is still well above norms. Deficits remain high, and the Fed continues to promise higher rates for longer. This noise creates differences between the yield on bonds and their true fair value. Noise is hard to ignore, but it can create a tremendous opportunities. Well, so although I think that they did kind of present an overly bullish case in there, even if you get 7 to 10% on that trade, that would be great. So it does kind of suggest going long TLT, doesn't it? You go long TLT and take profits at 10% or something like that. This is the trade, I think. Because I had been thinking, because he's long TLT. And I keep been thinking, yeah, but like, how good of a trade actually is that? Because, I'm not expecting a recession necessarily. But now I'm kind of been given a valuation sort of setup for this to come in and say that, well, you should be able to get between 7 to 15% possible. The offers are now stacking and chasing out the longs on gold. Yeah, okay, they kind of peaked a little bit there, huh? So over here in the Treasury, we did have that really encouraging move up and kind of backed off from the lows, but I'm not seeing the meta order long come in. So it looks like market making, that means that our upside is potentially capped. I've got an hour, so I think that I can try and let these last two contracts ride. Maybe I could take one off at 06. It looks like the cost basis for the sellers has kind of come down here and is at 07 now, so that might be kind of an area that might be difficult for them to get through without a real buyer stepping up. I do like the look of 06 because it's an even number, but yeah, buyers got to come in clutch. Well, let's not be greedy. They had a good move in gold today, right? Doesn't get much better than that, man. They were up 2% at one point. Well, it's 1.66%. Biggest loser so far today, RTY, followed by UB. So we are getting some steepening here today. Okay, we got something else to read. Housing starts slump in September. Rental permits plunge as homebuilder confidence crumbles. In yesterday's plunge in the NAHB sentiment survey is anything to go by, this morning's starts and permits data should be a shit show. Expectations were extremely mixed, with starts expected to jump 7.8% month over month after plunging last month, and permits expected to plunge. Permits beat expectations, but tumbled 4.4% month over month, as starts missed expectations, rising only 7% versus the 7.8% expected, worsened still by a downward revision from August from negative 11.3 to negative 12.5. This data reverses the recent trend in SAAR, but starts remain weak. Under the hood, multifamily rental permits plunged by the most since November 2022, while single-family permits rose for the 9th straight month. Multifamily unit starts rose by the most since August 2022. For context, September multifamily permits are down 14%, which is the lowest since October 2020, but September single-family permits rose 1.8, the highest since May of 2020. Okay. And rental starts bounced from 3-year lows. Given the NAHB sentiment, it would appear build permits are set to keep falling. So why is construction employment still holding near its highs? Question. Will the Fed please to see permits going down? Their hawkishness is driving home builders to produce less inventory that will not help prices and affordability. I wish when we were at 07 that before we had touched 07 that I had cleared my DOM here, but I'm kind of wondering now if I should have taken the other contract off at 06. I do kind of think that if we go up and touch 07 again, it's either that I have to take it off there or we're getting a full reversal. Where would you say is the best place or wait my channel? My order flow trading series. Definitely. And then you just have to sit and watch. Like, because you got to realize that, watching and analyzing this is a skill that requires your brain to create new connections and neurons and things like that. So you have to sit and come in every day, read the news, understand the stylized behaviors of order flow, and analyze things as they happen to build those connections. You have a playlist? I do. If you go to my page, you'll see it. There's an order flow series playlist. You'll definitely find it. Let's come over while we're watching, while this is kind of chilling. Let's check around maybe on Reddit. What's this? P&G sales beat estimates as price hikes offset lower volume. Okay. Reddit. Are there any well-known super successful day traders out there? There are certainly extremely successful day traders out there that are well-known, that are not YouTubers or self-proclaimed where it's part of their brand or promotion to sell something. Or is there a reason not many extreme success stories, say for instance Michael Burry's early career, are easily searchable in Google? I feel like there should be a few Mark Cuban types out there that admit, yeah, I bought that first commercial property or X I would see with my profits from day trading. Or maybe there's a super successful day trader that might want to become well known. No, I don't think so, because the reality is that day trading is not as profitable as everybody makes it out to be, and so the people that are really making real money from doing this are usually the ones that graduated to running a fund. So that's why you would want to look at the people running funds and not people just day trading. See, and then in the comments, these people are mentioning like Jim Simmons and stuff, and I'm like, I'm not sure if that's actually what he's talking about, but yeah, super real successful day traders aren't trying to sell their image. Like honestly, anybody online trying to sell their image, I think, should be treated with suspicion. The top comment here, though, mentions Trader Tom, who I think, I don't think he's necessarily selling anything. Wow. Let's see here. He says he has some statistics here. He has some live trade results. The day trading channel from April until today has made 466,000. I call bullshit. I see. Also, for starters, he's swinging. That's cool that he has the links to all of them, though. Some of these are like 10 hours, I think. Ugh. What's this? Running total is actually negative, though. The results he's showing her actually aren't that good because he had a really bad run at the beginning of the month. one of the issues I have with this is, I guess the swings makes it better, but you know, it's a Telegram channel, so like people are probably following him, and that might be helping it. Price action. I took one. Oh, why haven't you killed your long at 06.5? I'm waiting for it to touch my seller's average cost basis, which is actually 07 now. Maybe you're right. While I was talking, they touched 06.5, and I had an opportunity to get out there, and maybe I should have. Have to give him my email address to download his bullshit. Okay. This page got nothing coming on the 30th of April. The book is okay. Yeah. Okay. I'm looking for like you know, he's so they're claiming statistics. So I'm immediately like, okay. Let's go look at them and I can probably guess why I'm gonna think that these statistics aren't useful, but let's see. S&P 500 is incredibly tight today, isn't it? Well, it's not showing up yet in my inbox, so maybe it takes a while. But what I just saw already has me suspicious about that one. That reminds me a lot of Ross from Warrior. Well, anyways. They're not stopping. They traded 04. See, if I had taken the contract off at 06.5, I could be adding it back on here again, right? Instead of Twitter, what large thing could Elon Musk have bought for $44 billion? Oof. When did Ultralisks fall out of fashion in Zerg versus Protoss? So yesterday they posted the Africa StarCraft League finals, and though they were some of the craziest games I've ever watched. If you like StarCraft, you gotta go watch those. It's just insane. It's like match after match of them getting all the way up to the supply cap and just fighting each other zany for 15-20 minutes at the supply cap. Just nuts games. I try not to ruin it for you. Who won? I saw this thread yesterday and I didn't read it, but I'll read it this morning. Infants at rave. How do we feel about this? You shouldn't take an infant tour unless you have like headphones on them, obviously. Especially because I never see babies or young kids wearing ear protection. If my adult ears cannot withstand the intense decibels, I am certain that toddlers and infants can't either. Also, doesn't it just seem a little intense? I've been to about 12 shows this year, 6 or so at Red Rocks, and I'm always seeing babies. What do you think? Edit, glad to see, like, we all mostly agree it's the worst decision ever to bring a child/infant to a rave. Yeah. Minors are bad enough. You really shouldn't see kids at raves. I kind of, so here's my crazy idea I had the other day. Is there room in the market for family-friendly rave? Like, I think that there's enough millennials that are old enough now that they have kids that, like, a festival that was child-friendly could maybe work. There's a lot of comments in this thread. I can't even picture what vibe kill this would be. It's an adult. It is an adult space. I kind of wonder though, if you tried to run an event like that, if it got, you know, if it was a big one, probably wouldn't actually work. So you know what I'm noticing now is they are kind of reaching. Let's put this back down here. I'm seeing that Bryce will kind of reach and then sputter out really quickly. So I think that if I can get 250 out of this, I should do it, especially since we're starting to run out of time. you want a festival experience with a kid, go to a burn. Yeah, that's probably true. I see these comments that are like, keep children out of adult spaces, and I'm kind of like, are you trying to protect the children, or do you just not like kids? I'm gonna try and stir up some dust here in the Rave subreddit by posting another thread about this. Oh, jeez. Okay, so by the way, I need to put a stop there. I'm not willing to lose money on this. You think I'm gonna get stopped out of this? I think I am, because there's some volume behind this latest little leg, isn't there? In fact, case in point, it looks like we are right about at new lows in cumulative delta, but not in price yet. So that still kind of suggests that, like, you know, we seem to have this liquidity zone in here that's really difficult for them to get out of. But there's enough volume flooding through here that I think, yeah, scratches it. That's, well, you know what? It was a sim order. I was complaining about the trade from like the instant I got into it, wasn't I? So I guess it's only fitting. It's only fitting that that trade gets scratched. And now that they're breaching new lows, particularly in the 30-year and in the yields, I'm back to how concerned should I be? Yeah, oil and gasoline could be important here. I mean, I usually those events don't move the markets that much like that it moves the treasuries, but I think that the treasuries going forward are going to be more and more sensitive to oil prices, right? We've definitely seen that with this whole Israel thing that the treasuries start to get. Although it seems to me that it's more like once you're starting to get up into $100 a barrel that the treasuries start to pay attention to it. So. Oh, gold futures aren't quarterly? So what are they then? Are we not, is December not the front month? Why does Ninja Trader have me on December if they're not quarterly? Well, so with the treasuries here, probably if we can kiss 106, there probably will be a lot of liquidity there. If there's not, then I'm really going to be like, oh dear. 223. Oh, they roll over 5 times a year. I see. So you're saying it is December. December is correct, but it's not quarterly. That's interesting. I did not know that. November 20th, January 27th, March, May, July. Interesting. The July one is longer than the rest. Oh, that's so weird. I gotcha. So they have like one for each quarter, but then there's an extra one for the summer that's bigger than the others. Then the rest of that time is split into quarters. That's interesting. Okay, so the treasuries are once again like stuck here. Like, so we fell down and they can't seem to get above O2. It doesn't seem like they're trying to get above O2 though. And this move lower was accompanied by another drive in the dollar. And so we continue to see this dynamic where as the dollar strengthens, and I don't know why the dollar is strengthening here, but as the dollar strengthens, it seems like the foreign holders just dump their treasuries, man. Or at least the market makers drop prices on anticipation of them dumping. So let's see what happens at 06. There's already 2650 traded there, so I think that that's a pretty good confirmation that you are going to see a decent amount of liquidity there. Okay, 4,000 contracts. They sliced through that awfully quickly, though. Wow. 4,000 contracts that quickly is a little alarming to me. Now that we're at 06, I'm kind of looking at this like, well, it might be, they might go a try for 4.9. It's wilds. Bank of Japan stepped in today. 10-year Japanese bond yield hit a new decade high on Wednesday, leading to a jump across yields that propelled the Bank of Japan to announce an emergency bond buying operation. This is an insane amount of flow that has come through here, and I would say at an extremely unusual time of day to see a move that aggressive at basically 10:30 is just really weird. Like they saw me puke and they're like, okay, I guess we can sell it now. Seth won't be harmed too much. I appreciate it. I appreciate it when the block order desks are nice to me. If you could just let me know next time you're gonna sell so that I can just sell, that'd be even better. So I'm typing this post. I'm like, this is dumb. Should I even post this? Okay, they did extend a little bit below 06, but you can kind of see them like coming back to it. It's curious to me that more is traded at 31.5 than at evens. That's pretty. I don't know, guys. So when I come back and I look at things, you know, in the yields, I you know, going back to June and July, I think it was really July is what we have the data for, suggesting that like China or somebody like that has been selling. I do kind of feel like that all of a sudden yields have gotten way more aggressive than the current economic conditions justify. But at the same time, they've kind of been front-running what did end up being overly bullish economic numbers that kind of suggest that the Federal Reserve may have to continue increasing yields. So I don't know. It seems so fraught to me. It seems so fraught to me that this is either going to reverse back really hard soon and that we'll find ourselves above 108 within a week or two and then everybody cover, or things are about to get really, really ugly and another wave of inflation is coming. I just can't seem to get myself away from that scenario in my mind. The market, when you look at the S&P 500, I feel like that the market has kind of been a little bit sad. What was the word? Sanguine about it. Like they don't seem to care until the last few days, but they're responding right now. Oh dear, it looks like I have not enough memory or something. It'll kind of do that when you're not running enough memory. Well, I'm only about 50% memory, so I can't explain that. I'm using a lot of my encode though. Okay, now that's interesting. $8,000 contracts absorbed at 31. Big iceberg. Big order below that at 30.5. That kind of looks like a rate lock to me. And it is a 20-year auction today, right? People I respect say we're good and the worst is behind us, and I can agree with them, yet I can't shake the feeling that I'm missing. Yeah. So that was a 10K iceberg, man. The bid pulled away when it went bid. But that was a big order, man. I mean, you can see it even in that commentary that we read earlier where they're like, you know, if yields revert back, this is how far they'll go and all of that sort of a thing. Like, a lot of participants in the market are having a hard time explaining or justifying what's going on. And so there's people that are doing I would call it a contrarian trade, except for that it kind of seems like there are more analysts on the long side of treasuries than the short side of treasuries right now. I think that like trader positioning and everything, CTAs are just continuing to go short, right? So the treasuries are net short. Okay, but the analysts seem to just keep saying buy, right? And then the bids just get rolled over every time. So it's hard to say that we're not missing something. And like the thing is, in my mind, is like, you know what? Yields have been unusually low for a long time because of things like buying from China. And if China's not holding that stuff anymore and they're getting rid of it, then we have a real problem. Okay, so now we've slipped lower below that 10K, that 10K iceberg, and now we're seeing some big stacks on the offer. And they're still trading pretty big size as they sell down through. There's 400 at 29.5 and 200, or sorry, 4,000 at 29.5 and 2,000 at 30.5. So the bids are not pulling away in this instance. But the dollar just barely kind of chilled out. So yeah, I don't know what else to say other than that move is just scary. There's no other way to put it. It's just this freak out of nowhere sell that just spikes yields even higher. Like how much higher? We're like what, we weren't at 488, were we? I don't remember what price we had been looking at now. I mean, given the way that moved in the treasuries, I'm actually surprised that the S&P 500 hasn't fallen more than it has. Oh, I see Brando there in Discord. I'll add you. Man. If I had been in the position, so let's go back. If I had been like, I'm going to take live trades today, what would I have done? I think I might have taken a short in the yields and maybe made 10 ticks off of it. But would I have participated in this thing when they went down to the new lows? Like, let's say that I hadn't had that position and I wasn't puking. Pushing down to new lows like that, I think maybe I would have. I think maybe I would have started, selling it at like 02. I would hope that I would. Because that is a setup. Let's not say a setup, but that's a kind of a sort of situation that I love, right? Is when you're like breaking a low or a high and that you just continue through it. This is one of the primary reasons why I despise price action so much, because it's basically a setup that I know doesn't work, because I do the exact opposite so often and make money off of those guys. It's a John Grady setup when they make a new low and people just puke and it keeps going. I'm all about like, okay, where's the spot at which people would start getting stopped out? Like just past the last swing or whatever it is. And then you see something that basically says to you, they're going to go for it, right? And those are always my favorite trades because, that's when you might see like the volume just like completely burst through. In this instance, it didn't really do that, did it? It was tick, 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 tick. Huge iceberg. Tick, 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 tick. That volume that we had when we dropped below 106, though, that probably was some stop volume because that came out so fast. I wonder if there was, there was longs sitting there and they were like, well, I don't like this. There's an iceberg there. I better get out while I have the chance. And that's why they were able to sell so much there so easily, I don't know. Oh boy. 100% of the time, man. No, I don't have to see that. Oh yeah, you're going to have to send that one to me on Discord or something. Are you programming these in NinjaTrader or how are you doing them? I'm guessing probably not NinjaTrader because of some of the stuff that you've told me about. Oh, it's in Excel. Well, you send it to me, I'll program it in NinjaTrader. But what platform do you use? Because if I made it in NinjaTrader, would you actually be able to use it? Oof. I mean, so the next big orders that I see below us is 26.5, right? If we're touching 26.5, that's like another bust day. Oh, you use MT5. Oh. Tell me now. No, you're on your own, bro. I'm not messing with MT5. I'll program it in NinjaTrader. Man, oh man, oh man. Okay, and with that move, the equities took are on another leg lower, another 5 points lower. This is scary. A big old order at 29.5. Like, my issue is, okay, maybe the reason that yields are going is just sovereigns selling it, right? I can't explain why they did it the way that they did. That's just a little weird, the way that all played out, to be honest with you. At this rate, we're going to be at 5% before the end of the week. I mean, good grief. I guess 5% before the end of the week would be like way too far for us to move, but... Okay, you know what? Like when I come and I look at a daily chart here, we're at 105.27.5. The degree of the move here today is actually a little bit under what the average true range has been as of late. So I don't know if that one is, if this sell is like the end of the world. Do you think the bonds are selling off ahead of the bond auction? They could be, I mean, we do have reason to be concerned about when the issuance comes out, particularly in the longer dated ones, because all of the liquidity is moving to the short end of the curve, that you get these situations where the 10 and the 30, there's not enough bids for it. So it could be, and maybe that explains the timing. Maybe there's certain piece of information or something about that time that's when they realized that the auction is not looking very good. I just 8:30 move is not the typical time for another leg of a large meta order to start after them having just sat for an hour, you know, after the S&P 500 opened and doing nothing. That's a little weird. Sounds like there more Congress stuff today. I'm getting some signs that they've maybe stabilized a little bit better here. I mean, they did stabilize a little bit after this slip through 06, but that didn't last very long. But this one is looking a little more promising. I can like reset it to right there. Is that really that big of a... No, it's not that big of a move. I don't know. It felt huge. The volume behind it was insane, right? Oh man, the volume behind it is really insane, guys. Holy crap. That was 30,000 contracts. Well, if we go back to the start of this, it was 40,000 contracts. That leg was 40,000 contracts? Are you kidding me? Even if I had caught this short somehow, there's no way I would have caught the whole thing. I would have gotten out. I probably would have gotten out on the big order. I probably would have gotten out right here. It was only half the move. Bonkers. Just absolutely bonkers. I just need to start coming out here and just going long yields every day so that they reverse. Because this stuff is just like not. What? Before Jim Jordan's first defeat, the wife of Republican Representative Don Bacon received anonymous messages warning him to back Jordan's speakership bid or risk being ousted. Your husband will not hold any political office ever again. Your husband will not hold any political office ever again. What a disappointment and a failure he is. Why is your husband causing chaos by not supporting Jim? Well, that could just be any idiot on the internet. The Donald Trump supporters are definitely upset that there are Republicans not supporting Jim Jordan. Okay, so at about the top of the hour, they want to proceed with a vote again, apparently. You expect demand for the 20-year auction, big tail? I don't know. I do kind of wonder, like, having the fall that we've had without there being any news or anything driving it, that there might not necessarily be a big tail, but rather that move down was pricing correctly for the auction, perhaps. But I guess sometimes even after a big move, they still get it wrong. And for that matter, it could even be a big move the other way, possibly. Not as likely, but I've definitely seen it happen before. where like they had this big trend down all morning, and then the auction happened and it completely reversed the move. I've seen that happen many times, actually. But I don't know. I'm just. It seems to me this looks like a freak sell that I'm sure there's a good reason behind it, but I don't think that it's anything that we could ever have seen coming or predicted. 30,000 contracts selling out of nowhere is just so wild. And it scares the crap out of me. That's good because I need to get all the crap out of me. I have a colonoscopy tomorrow. Nick Timoros, 15 minutes ago. So after this already started, Philadelphia Fed President Patrick Harker said the central bank can wait until early next year to decide whether higher rates have done enough to beat inflation. He said rate cuts could be appropriate if inflation reaches 2.5% and is heading down. Okay. I'm not too concerned about it. I'm not going to I'm not going to trade gold. Interest rates sure are getting spooky. Well, so I continue again with like we read that whole story. They made a really good case for going long TLT, but I'm still kind of like it's really hard for me to watch that and then be like, let's go long TLT. Like this is just brutal selling. And it is the dollar, man. Oh, why am I so... Okay, I don't want to scare you guys, but I'll leave you with... Don't go long TLT, stay long TLT. I don't want to scare anybody, but just some speculation, okay? There are concerns that the United States or the world is headed towards a World War III. That eventually the situation in Ukraine, this new situation in Israel, and a possible upcoming situation in Taiwan comes to a head and creates a full-on World War III scenario where it's the US and NATO countries versus China, Iran, and Russia. In such a situation, the United States is not in a very good financial position. It is not in a very good financial position at all. And I kind of have to wonder how much of this selling is kind of intentional stuff. Like China, has multiple reasons to be kind of doing this. Because for one thing, their currency has been under pressure and they've been supporting their currency a lot, which is very different from what they usually do. Usually what they do is they go and they buy treasuries and then they sell yuan and buy treasuries with it, right? That's what they've been doing, and that's how they've manipulated their currency to get the cost of labor so low and compete with Western countries, right? But because of COVID and all of this kind of stuff, it's their economy hasn't been doing very well, and so they've been supporting their currency. And it seems like they're doing the opposite, right? They're selling their treasuries and buying yuan to support their currency. And we did there's a report on Zero Hedge. I think you have to be a subscriber, but there's a report on Zero Hedge from Goldman Sachs talking about this and showing the data that supports the theory that a large portion of the downside action that we've seen since July, essentially, was due to China and possibly other sovereign wealth funds selling. And so I just stick that into everything else. I feel really nervous about if that World War III scenario happens, and maybe it's not for another 5 years or something like that, right? That we are not very well prepared for it. And that because what I'm seeing right now is maybe we aren't very well positioned for the economic warfare front. Because that's what we do, right? If there was a war, I wouldn't be drafted because I have gut issues, so you can't serve in the army. I don't think even if they were like relax the rules, I think that they still wouldn't let me, right? So I would be here fighting the economic war, and do we stand a chance if China's just selling their bonds? It's no good. It's no good. Oh, the colonoscopy is going to go fine. I love it. Like, here's the thing. Obviously, cleaning yourself out for it kind of sucks. But there's a great payout after it. Because when they put you to sleep, that stuff can give you the best dreams. Can give you the best dreams. And like you just sleep hard and feel so rested out. And then you get to eat afterwards. And whatever it is that you eat afterwards is like one of the best meals that you've ever had. Yeah, it's serious. And like the colonoscopy part, like obviously having a tube stuck up your colon is not fun. But you're asleep, you don't know what's happening. You don't remember it. So dude, so we are seeing square root law come in here again. There's square root law. But they're still kind of selling, I think. So I don't think that I still kind of feel like that if this was a planned meta order that they wouldn't have done it at that time. But maybe they did. Maybe it wasn't. Maybe it was like maybe this was the first leg and this one ended up being a much longer than usual because the liquidity was weak. Remember this whole time we were talking about, on the move up here, it seems like the liquidity ain't quite right. So maybe it has to do with that. But I'm over time. I better get back to it. All right. See you guys tomorrow morning. In the meantime, stay excellent, team. Don't get run over by the treasuries here.